Have you ever heard the saying, the moment you pin the blame on somebody else, the responsibility of taking action is no longer in your own hands? Now, what does this mean for you as a trader? Let's first talk about what makes a profitable day trader. And we all know that 20% of actual profitability comes from the model that you're using, the strategy, and how well you understand and master the strategy. But the 80% comes from psychology. So traders have this big misconception when they come to me and tell me, hey, I've been struggling to pass this account, I've been struggling to get payouts consistently, I keep blowing my accounts. I always ask them, why? Why do you think you haven't been consistent? Why do you think you're blowing your accounts? What's causing these issues? And they say that it's their psychology. And it's always psychology, psychology, psychology. Now, I personally as a trader believe that psychology is the number one thing to determine somebody's profitability. But you cannot focus on your psychology until you have understood your strategy, the system that you're actually using. Because without understanding the system and finding an edge in the market, you're not going to be able to focus on your psychology because you're not going to understand where your psychology is messing you up. You have to have a very consistent and robotic system that you come into the market looking for this specific model, specific strategy during the specific time of the day. Because when you have this sort of edge in the market, then when you see poor performance, you instantly know that it's you because you know that this model works. You know that it gives you an edge, and whenever it doesn't perform, that would be your fault. It would be some lack of execution, it would be greed, it would be over trading or over leveraging, and all of a sudden you can identify the exact reason why you're not succeeding as a trader. And that reason is you. It's your lack of patience. It's your lack of discipline. It's your lack of being able to follow your system the way that the system was created to help you succeed in the markets. So do you guys remember what I started this video off with? The moment you pin the blame on somebody or something else, the responsibility of taking action is no longer in your own hands. Most people lose money not because they don't know how to trade, but it's because they don't know how to think when they trade and when they take losses. In this video, I'm going to give you the blueprint that I wish I had when I started, a full breakdown of mastering your psychology. And similar to the last video I uploaded on simplifying ICT, I'm going to give you a lot of analogies that you can pair with this psychology, so whenever you're struggling, you can remember these to help you with your discipline when it comes to your psychology. Let's fix your mind and let's fix your trades. The first lesson is that the market is a mirror of your mind. It reflects your greed, it reflects your fear, it reflects your impatience. And it doesn't just reflect it by showing you those things. It reflects it with very painful lessons. If you don't conquer your psychology, then the market is going to conquer whatever you have left in your bank account after you started trading. And that's why it's so important to journal. Not to journal to keep a record of your losses, but to journal to identify exactly what it was that caused you to lose in the market that day. Whether it was a problem of you following your system, or whether it was a problem of your psychology, whether it was because you wanted to hold your trades more, whether it was you being attached to how much money you lost the other day and wanting to make that back. Because the plain and simple truth is that the market will reflect exactly what the problem is. And it's not going to tell you what it is. It's going to reflect it based off of your performance in the market that day. You're not coming in like a 9-to-5 job and you're getting paid for your efforts. You're getting paid based off of your performance. So your performance has to be A-class. Be sure that you journal and identify exactly what is causing you to lose every day that you have a losing trade. And this doesn't mean that you shouldn't journal on your winning days, because even on your winning days, you can be rewarded for doing something really, really stupid. And if you don't properly identify that, then you're going to keep making that mistake. And that mistake that you got rewarded for is going to cause you to lose much more money than you would have ever thought, because it was hidden in your wins. So be sure to always journal your wins and make sure that you journal. If you had a winning day but you didn't follow your rules, you didn't follow your system, and you didn't follow your psychology, then you should not be proud of yourself for winning that day. You should be very thankful that you even ended up walking away with profits that day, but be sure that you're not proud of yourself for that so that those mistakes don't continue to cost you more losses in the future. So remember that the market is a mirror of your mind. It will reflect exactly what psychology points you need to work on. You just have to be able to identify those. And one of the most important lessons for a trader to learn is not to be blinded by the winning days. If you have a winning day but you did not follow your plan, be sure you journal that as a losing day because you did not do what you should have that day, and it's going to cause you to lose much more in the future. The second lesson is going to be that greed will empty your account. So let's imagine you took 3 winning trades this day, and one of the mistakes that I always made as a trader is thinking that I can risk the profits that I made that day to take a bigger risk position. Because here's the way that the market works. Typically we catch a trade in the early stages of the day and we catch the expansion, and there we're done, right? We close our trade and we already hit our take profit. But maybe our take profit wasn't something that we're content with. It was only 2,000 when we normally go for 5, and we're not content with that and we want to make more. One of the things that I always did in my early stages as a trader was risk the 2,000 that I made to get that 5,000, because I'm already I'm up on profit for the day, so even if I lose the 2,000, it doesn't really matter. I'll just be back where I started. And that was one of the biggest mistakes that I have ever allowed myself to do, because the moment that you lose that 2,000 and you're like, hey, I would have actually been pretty content with 2,000. Like that's still some good profit for the day. But I went ahead and risked it all to make 5,000. I risked it all later in the day when there's already no trades, because the daily range has already hit its target. The main reason why we closed the trade in the first place. So when you end up risking your profit, you'll only end up losing more than you should, because the moment that you lose that 2,000 that you weren't content with, all of a sudden you would have been content with that 2,000 and you'll try to make it back, pushing yourself only into more drawdown. So not only did you risk the profit thinking that you were just going to end up exactly where you started that day, you'll end up further behind the start line, and this leads to a lot of blown accounts. I know that you've experienced that, so if this sounds familiar to you, drop it in the comments and let me know what experience you've had. I personally took one of the biggest losses that I've ever had because I was up like 3,000-4,000, and I was just like, I've been pulling this kind of money out like on a week-to-week basis. This time I want to go for more. I want to get that $10,000 to $15,000 payout that I always see these influencers flashing. But I was comparing my day 100 to their day 1,000. So when I would risk that profit trying to make more, I would only end up blowing my account trying to make back the profit that I already had. So don't make this mistake again. Now the third lesson is fear. Fear that makes you get out of your trade too early or getting out of your trade too late. And for the analogy, let's imagine that we're going skydiving. Before you go skydiving yourself, right, you can go skydiving with an instructor. But before you go skydiving yourself, you have to get trained. They teach you exactly how to pull it. They teach you how to use your backup parachute. They teach you how far from the ground you're supposed to do it. They teach you about like your exact landing ground, because if you land in a building or something, like you risk hurting yourself on hard floor. Typically they have like a grass area that gives you a lot of space to land safely without hitting anything. And you're trained on this before you go into the field by yourself, before you can skydive by yourself. So now let's imagine you get scared after all this training, and you get scared anyways because you jump out of the plane and 3 seconds into your jump you pull it because you're scared of falling. And now you're floating around, and the reason why you shouldn't do this is because the wind will take you somewhere else. It will take you somewhere else because it's going to be very hard to control it so far in the air. You're going to be literally floating for an hour, and you're definitely going to land somewhere off track. Now when it comes to trading, that's you exiting too early. You have a good trade, you know where the daily range is going, you've trained yourself on this over and over again. Like this is a really big mistake that a lot of traders make when they're starting to move from demo into live capital. Like they know what they're doing because they've spent so much time on demo learning their strategy. They spent so much time backtesting their strategy, and they're prepared for the live accounts. But that fear will cause them to exit their trades early. Even though it's running in your direction, as soon as it pulls back a little bit, they get out of their trade, and now you miss out on the move. And then there's the other example of the trade running in the opposite direction, and you're afraid that you might be wrong, or maybe you're afraid that it's just moving up a little bit before it runs in your direction. And so what you'll do is you'll move your stop loss higher and higher, and you'll take a much bigger loss than you would have normally taken. And this all comes from fear. Fear will cause you to exit your trade too early or to exit your trade way too late because you're afraid of being wrong. The fourth lesson is revenge trading. Revenge trading is like fighting fire with fire. You already took a loss, and instead of thinking, okay, let me wait for the next setup, because the reason why you took that loss was because you followed your plan. You still waited for your setup, you waited for your confirmation, the right time, and you went into your trade. Maybe your bias was just incorrect, and so you took a loss, but that's fine. That's a winning day in my eyes, because your bias was incorrect, but you still followed your system. Now, revenge trading is when you stop following your system. Revenge trading is not taking a lot of trades back to back. Because if your bias is correct, you can continue layering in setups. You can continue taking trades off of new confirmations that form. If you're confident it's running in your direction, you're winning, you're adding to your winners. Revenge trading is trying to make back the loss without following your system. And this happens after you take a loss following your system. And now you're like, okay, I took a trade off of my system, I already waited for my confirmation, I just took a loss, but I did get the confirmation, so maybe it just went a little bit higher and now I'm gonna sell again. And so what you're doing is revenge trading, because you're taking a loss and trying to make back the loss without waiting for your setup. Now, it's not wrong at all to take another trade after taking a loss. It's wrong when you take the trade to make back the loss without looking for your setup, because your setup is what makes you profitable, right? It's the system that you follow that allows you to win in the market. If you continue waiting for your setup and your setup presents itself 5 times, take 5 trades, take 5 losses. But as long as you followed your setup, you're fine. Your bias was just incorrect. But when it comes to revenge trading, you have to make sure that you're not entering trades without waiting for the setup, because the setup itself should be something that doesn't present itself like this right away. Because if your setup only revolves around the lower time frame, you're just gonna lose your account just like this. Like a snap of the fingers, your account is gone. You have to make sure that your setup revolves around the higher time frame. And if you get your first confirmation on the 30-minute and it didn't respect it, you're gonna have to wait an hour or 2. And that will actually help you reset your mind and then go into the next trade with a clear mind, ready to execute on your setup properly and not actually revenge trading, trying to make back the loss, entering without any confirmation. So make sure you're focusing on your setup and not revenge trading. After a loss, be sure that you take at least a 10-minute break. There's going to be so much more opportunities. Do not be entering another trade right away. Even if you miss the high of the move, you'll still be able to get into the continuation if your bias is correct. There's no such thing of you actually missing out in the market, because in the worst case, you miss the move and you'll catch a trade in the next day. You'll catch a trade in the next week. There's always going to be opportunities. Make sure that you preserve your capital and give yourself the opportunity to take more trades in the future. The 5th lesson is that patience is your superpower. Have you guys ever gone fishing? Because I have an experience that really taught me about patience. And it was when my dad took me fishing one time. I haven't fished for like years on end, so I had no idea what I was doing, but like, I'm an independent person. I was like, okay, I got the fishing rod, I went to my side of the boat and I just started fishing on my own. And I'm like, you know, the little technique where you pull up and you try to hook the top of a fish's mouth when they like bite your bait. And I was doing that. I was reeling up every time I got a little bite or something, and every time I'd get nothing. And at some point I just gave up and I went over to my dad's side and I see him standing there not moving anything. Like, he's not reeling anything, he's not moving the fishing pole. And I'm like, Dad, are you even fishing? Are you gonna catch anything? And he's like, have you caught anything? And he had a bag full of fish and I didn't. And the reason why that was is because I was like impatient. I was trying to reel up the first bite that I got. And when it comes to trading, that's us trying to take a setup off the first little 1-minute confirmation we get. As soon as we get some little movement, or like we see an impulse move in the direction that we're looking for, we try to get in right away. We try to reel up that fish right away, and you get nothing. The market will go and stop you right back out because you didn't catch the move. It's not time yet. And what my dad taught me is his knowledge on the fish that we were catching. I forgot what the fish was called, but it's the one that like stays near the bottom, the very bottom, like a rockfish or something. And so what we're supposed to do when we're catching rockfish is leave it on the bottom, like literally leave it on the bottom. But my mistake was I was pulling up and I don't think I even hit the bottom every time. So I wasn't even fishing for the right fish. I was just moving it around, and occasionally I got a bite from maybe some little fish, but I didn't get the fish that we were looking for. And in order to catch the fish that we were looking for, you literally just leave it on the bottom, you wait for the setup, which is the fish coming and grabbing your fish. I was trying to catch the fish, but what my dad was doing is letting the fish catch itself. It would go and actually grab it to the point where it would bite it and get stuck on it. He would let the fish catch itself. It would go bite it, and then the fishing pole would like visibly like dip down, and that's when you know to reel up because you actually caught the fish. And so the lesson there was to be patient, to understand the knowledge of, first of all, what fish you're aiming for, and then the technique that you need to get it. And then you got to be patient. That means as much as you want to, you don't move your fishing rod. And so that's when I finally started catching fish, and I even caught more fish than him that day because I figured it out. I went and I cooked up with that technique. And in trading, that's exactly what I described earlier. When we get that first little 1-minute confirmation, we try to get into our setup. But we have to understand the kind of setup that we're looking for. Are we trading from the daily time frame? Are we trading from the 4-hour time frame or the 1-hour time frame? Did we close already in the confluence that we're looking for? Did a new candle open up? All these things are important to determining what kind of trade we're looking for. You don't scale down to the lower time frame until you get that higher time frame candle close, you get the manipulation, and then you're finally looking for the distribution. You have to understand the kind of setup that you're going for, and then you have to be patient. Once you understand that you have to wait for the 30-minute confirmation, if you're looking for a 30-minute trade, then you just sit there and wait. Sometimes that means walking away from your computer and not getting the trade right now. Maybe that means you trade like literally 5 hours later. For me, I trade in Asia session, so that's like 5 p.m. for me. Sometimes I don't get the trade until like 9. So I'm just away from my charts. I'm not sitting there waiting. I'm just literally going on about my day, occasionally checking the chart. When I get my trade, I get into my setup. So patience is your superpower. Remember the analogy with fishing. You gotta be experienced to understanding what kind of fish you're going for, and be patient with the technique that you need to catch that fish. Because I was trying to reel up on every little movement I got, and I never caught a single fish like that. Now, I wanted to leave you guys with one main lesson, and that is to build mental rules and not just trading rules. Because when it comes to trading, in our system and our strategy, we have a specific set of rules, like the time that we wait for to get into a trade, a little liquidity sweep before we get the confirmation, and all this stuff goes into our trade. But we also have to build mental rules, and those mental rules include like taking a break after a loss, or stopping trading completely after 2 losses. And you can really nail down specific rules that work with your personality best, because you know yourself better than me. But remember, never pin the blame on the market. It's always your responsibility. And the moment that you put the blame on either your strategy, the market, or somebody else that maybe you were following, the responsibility leaves your hands and it enters theirs. So you will never learn your lesson if you continue to blame other people. Your brain is your main tool. Would you go to war with a jammed gun? So don't go into your trades with a jammed brain. Don't engage in social media or other high dopamine activities before you trade, because it's only going to make you more emotional. When you take a loss, you're going to want to make it back. Really adapt your mind to the kind of trading style that you have. If you're trading in the evenings, make sure that the things following up to your trading session are things that will allow you to perform at your highest capacity. Every elite trader you know wins because they mastered their mind and not because they found the perfect strategy. Comment mindset if you want a full PDF breakdown of this framework, and I'll send it to you personally. Thank you all for watching through this video, and if some of these psychological things are things that you're currently going through, drop them in the comments and let me know which ones you're currently battling and what your strategy is going to be to conquer these things.